And a very good day to you, a good evening to you wherever you're joining me this evening. A terrible day for stocks, as I showed you in the opening there. All the major indices are sharply lower, and there's very little enthusiasm for buying at the moment. It's the technology stocks that seem to be pushing the market down hardest. That's ignoring Boeing, but that has unique factors that we'll come to in just a moment. The losses across all indices, and oil, which is significant, is down 9%. That is going to be a demand-led fall rather than a supply-led, as we saw a couple of weeks ago with the hurricanes. There's no hiding place either. Tesla, just have a look at Tesla. Now, bearing in mind that during the month of August, it rallied up, not rallied, it roared up more than 80%. Tesla is now down as much as 18% at the moment. That followed the S&P 500 Index Committee opting against its inclusion. Elon Musk has tweeted, "À la guerre comme la guerre." It's the French historic tradition that roughly translates to all is fair in love and war. There's no love lost, it seems, at the moment. À la guerre comme la guerre. Sounds good. Quincy Krosby is Chief Market Strategist at Prudential, joins me now. All right, the markets are being routed, Quincy, but it has to be seen in context, I realise, with the great run-up that we saw in August. Now, I'm guessing the run-up wasn't really justified, and this is sort of putting things right.
Well, yeah, I mean, you have a relentless move higher. It was dramatic. And now we know one of the major underpinnings for that move was the call buying that we saw from the big whale, $50 billion worth from SoftBank. We don't know how many other whales there are. But what happens is, Richard, that when you have that, you're working with a broker dealer selling you those options, call options, on the thought that your stocks that you bought the options on will move higher. What happens then is that those broker dealers usually buy that underlying stock as a way to hedge. So you have that going on. And then in addition to that, we have inexperienced traders hoping to make a killing. They did, but they went in for too much and kept going and going. They've gotten killed. And then what happens with any kind of sell-off like this is, one, you're looking for more whales or little baby whales. And then you're also looking at the margin calls, those who borrowed money in order to join this relentless move higher. They are under fire now. And what happens in that in real life is I'll sell whatever I can sell to meet that margin call.
Right. All right. Now, Quincy, is it believed that SoftBank, I mean, if they made the call option and then they bought the underlying security, then they're covered or at least hedged. But is it believed they may have lost money on all of this?
Well, yeah, they did lose money. They did lose money on it. You see their share prices being battered. And then again, the question is how many others have been doing this? There's an old expression from Wall Street, Richard, money goes to where it's best treated until it isn't. And that leads to that relentless buying until something comes along that stops it. And that's what's happened. And the market was overbought. It was extended. You began to see call buying outnumber put buying, which means I'm protecting to the downside. You began to see the idea of going in and shorting the market. Everyone just caved. You mentioned Tesla. The analysts that were the most bearish on Tesla actually caved. They wound up just giving up. That ultimately, from a contrarian standpoint, we were due for this kind of sell-off.
But Quincy, I have an element, forgive me in my voice, if you hear an element of exasperation bordering on anger, that, the economy's market players here. The economy is not in good shape. There's no vaccine yet, and it'll be months before it's in full throttle. The Fed has changed its inflation, but the Fed is still pumping money into the economy. So the Fed's the major player in town. The last thing we need is traders playing shenanigans with the market.
Well, yeah, but the fact is they always do. And the problem is, as you know, Richard, all of these products, we haven't even gone into the products that are filled with leverage. that now are also being unwound. Sometimes people think they're smarter than Mother Nature. They think they're smarter than the market, and then they get caught. It always happens.
Right.
We're not through with this. The unwinding is going to continue until the market just is oversold, the air comes out, and then we start to see buyers come into these very stocks. They're good companies. They're companies that make money. They're companies that have recurring revenue. It's not crazy. Yeah.
If we're looking, though, to trade the value of the stocks in terms of the economy, because as we look towards the winter and we look to the difficult EPSs that we're going to be seeing if there is a resurgence, where do you place the market? I mean, it's been clearly overbought as against the economy. Where do you place it now vis-a-vis the real economy?
Well, what's going to happen is as the tech names become oversold, buyers will go in there. Why? Because they are growth names and they actually made money. The valuations were thrown out the window. No one cared about valuations, and you see what happens. However, this isn't 1999 when it was only about tech names. You have got, how about consumer staples, Clorox? You've got Spam, Hormel, that's the mother company. Campbell's Soups, that's the other side of the equation, the other side of the barbell. You also have materials names moving higher. The weaker US dollar has been helping. The turnaround in China has been helping. And you also have consumer discretionary names. Some of those companies that are associated with the housing boom in the United States, they've been doing well. But you can't beat the market capitalization of these big tech names. Over in NASDAQ, you have Tesla. Obviously, they're not in the S&P 500. They make up, the six names, make up about 50% of the NASDAQ's unbelievably climb higher. Money will go back into those names when the share prices come down. If the economy is not healing and if we don't have a vaccine on the horizon.
How good to have you with us tonight, Quincy, to make sense of it all. I really appreciate it. Thank you for joining us.
Thank you so much.